Okay, and good morning, traders. Today is Wednesday, March 25th. Michael Boutros with you on the line today. Welcome, guys, to this intraday strategy webinar on SB Trade Desk. Hey, Michael, great to see you again. Peter, Jay, great to see you guys in the room. So, looks like we got a deal overnight. From the notes I took, I was just reading this morning. Direct check payments to Americans, expanded unemployment assistance, emergency loans to small businesses. So we're talking about those businesses affected by the shutdown, stabilize key national industries. So all the talk that you've heard from the president about Boeing and some of the larger companies that are essentially the airlines, front and center, strict oversight for large corporations. So it's on its way. Markets rallied you guys saw the Dow ripped. We saw a big recovery yesterday on prospects that this was going to go through. Didn't go through till like 1 o'clock overnight. But as we head into the U.S. markets, looks like we're poised to open a little bit higher. We'll see what the reaction is as we get deeper into the session. On the menu for today, we're going to hit DXY as always. Quick look there, and Euro, dollar CAD, Aussie. I got you there, Peter, on the SPX for sure. Dollar Swiss, little consolidation near resistance, dollar yen at resistance, and sterling all at resistance as well. All right, any other questions or trade setups? As always, guys, feel free to throw them on the message board at any time. Here's what DXY looks like into the start of the session. Here's the weekly chart. So the level that we found resistance at was highlighted here on the weekly chart. That was the 2016 high close. So not the high day close or the high week close, but the actual high close, 102.95. We registered a high last week at 102.99. That's still in resistance at this point. Big breakout of upslope resistance, massive move that we saw in the dollar, guys. And the broader dollar advance is in question. And you're seeing the dollar sort of take cues on its own merits on every major, guys. So the DXY, for all intents and purposes, at this point, isn't really going to be that base dollar move that we usually look at it to tell. So key levels on the weekly chart, 102.95. Here's what the daily chart looks like. Same thing. Again, there's that slope. Whoops. There's that slope, upside break, 2016 high close, just above that, the 2017 high day close, which was the original target at 103.21. And then obviously the highs right there. It's not 100% extension, just the highs. So you're kind of in no man's land. DXY, again, for the last couple of days, weeks, ever since the breakout above this channel, hasn't really given you much to get in by way of new positioning. Iman says, good morning, Mike. Sorry for my delay. No worries. Great to see you in the room. So there's nothing really to look at here except this. Here's the intraday chart. So this upslope that we've been following, where was our last update on DXY? Right here. Same slope that we've been following. Here's the upside move, 103.21. We turned right ahead of that. Again, the 2016 high close, 102.95 was identified. Breaking through this median line slope, key support at this point. You're testing slope support, but I still like that swing low from where we opened on that little gap last week. Gives you basically 100.77. Break below that, in my mind, is what I would want to see to validate a near-term reversal in price. So we're not quite there yet, which is kind of my hesitation with really getting involved in the euro at this point. Haven't done anything with it over a couple of days, but our obvious trade is that we've been looking for euro support, but it's been very hard with the DXY just holding near resistance here. Obviously, 60% of this index is euro. Keep that in mind. But no change to any of the levels that we're looking at here for DXY. Face value, it's setting up its weekly opening range just below resistance. All right, so that's number one, not our favorite setup. Here's a quick look to euro, and then we'll jump into last night's update. Here's what euro looks like on the weekly chart. Again, big support zone. Didn't see the break and run that you saw in DXY, right? You closed just below it, but here's the pivot and recovery above. We're talking about the uncovered close from 2017. We're talking about the swing lows from early March of 2016. Big pivot in price, slope support. Is that a false break or what? So, and I always tell you guys, usually on the weekly chart, if there's sort of a lack of conviction, I usually don't even get any deeper and try to get involved in trades. But here's what it looks like on the daily chart. Also pretty messy. This descending channel formation held support. We broke channel resistance and then plummeted right through channel support, rebounding in. Not a very attractive daily chart. The intraday, again, gets a little bit cleaner. Descending slope off the high that we were following from way earlier last week, still in play. Again, very similar to DXY at channel support, euro nearing channel resistance. Now a breach here with 109.32, 2019 low day close, but the big level is 109.65, 109.75. This is where I'm looking for a larger reaction. So if we get the breakout, if you're holding any longs, this is where you want to take a little off the table. If not most, stops break even or better. A pivot above this would validate in my mind that we have a more significant low in place. Now the whole thing with this, and remember guys, into the open of the week, one of the things that I noted was basically that there's two things to really keep an eye out for this week, and we're getting one of them now. One of them was development of therapeutics or remedy cure, not cures, but treatments, right, for people who are afflicted with the virus. And again, guys, we talk about this in the concept of trades. Don't want to downplay the human toll here. Both me and Jamie know people who are affected by this, so it's real. But I don't want to be numb to the humanitarian effect here. But two things to look for from a market standpoint this week were A, developments in therapeutics, and B, which is what we're seeing now, movement on more fiscal, aggressive stimulus package. So we're talking over $1 trillion, guys. I think it's over 2 trillion at this point. And it's the largest fiscal stimulus package in the history of the US. So, I don't want to get into too deep into the weeds, but we talked about this if you joined me on the webinar on Daily Effects on Monday, about how the demand destruction in my mind is really paramount. I really don't see how even fueling direct liquidity into the market at this point. And the Fed is, to say the Fed is throwing a bazooka, we talked about this last week, the Fed would need to come out with a real bazooka, but it's really on the fiscal side that matters. Well, the Fed is throwing a bazooka, the kitchen sink, they dropped a nuke, now they're looking for another sort of mother of nukes. And while the market has rallied, I don't think that's been largely because of what the Fed stimulus has been doing. The Fed sees a liquidity crisis on the horizon, and they're trying to address that. But the market is really concerned about, even when we do come online, what does that look like? Is the demand going to come right back, or is this going to be a prolonged sort of low turn towards the bottom? Also, the markets took solace on the fact yesterday that, I don't know if you saw the town hall with President Trump and the coronavirus task force, but they're essentially downplaying the length of the shutdown and his yearning to essentially turn the markets back on. It's going to be more than likely, guys, a segmented thing, right? Where they're going to turn on the markets that are in more subtle areas, where areas, hotspots here in New York, it's going out of control, right? I think the numbers are just getting insane. So New York as a city, as a metropolitan area, probably won't be online by Easter, which is what was noted yesterday. In any event, now we're getting into the weeds, but the markets rallied on the concept that, oh, wow, okay, so Trump's not going to close down the markets for 6 months or 3 months or even 2 months would have been a big deal. So what does that mean for broader risk? So any questions here on the euro? Kind of sidetracked here for a minute, but for the euro, if this is going to break out, this is the level to beat. If we get back below the weekly open, which is essentially right under that uncovered close, I didn't label it, but it's right here. You're essentially risking, resumption of the broader downtrend. Remember, this is a huge support zone, both on a daily or both on the intraday and the weekly. Really, really big. We'd have to assess new targets. So euro kind of shelved for right now. Want to see a reaction here. Let's jump into last night's update, which was Loonie, Aussie, and SPX. I know Peter wants to take a look at the SPX. So here's what we looked like yesterday. Dollar CAD. So we've been covering this pretty intently. It's a pretty simple setup, which is why I wanted to bring it up. At this point, you're simply looking at a weekly opening range, again, just below resistance. And the major resistance level is 145.34 into 145.65. That's the 2016 high, close high, and the 100% extension of the advance off the low. So off of the 2017 low, 2018, 2019 high, and the low we made right into the close of last year. The 100 is right here. Beautiful confluence region, right on slope resistance. So this is the 618 of the pitchfork we've been following from the lows. Again, those lows of 2016 and 2017. Really clean, right? We did a rework of this a couple of weeks ago and didn't think we were going to get here that quick, but here we are. So on a daily close basis, it's paramount to keep your focus on that region of resistance, 45.35 into 45.65. I know it's a little bit bigger, but hey, the ATRs have blown out. Here's what dollar CAD looks like on the weekly chart, right? Consolidation all throughout last year, breach, breakaway gap. We've taken out all the targets, and essentially this was our last sort of confluence region. Let me get this, there you go. So, base case scenario, you want to be cautious here for topside exhaustion well below that region. On a weekly basis, forget this 786. Keep your eye on that high we close. 141.15. Near term bearish inval, or bullish inval, excuse me, is 139.50, essentially 139.40 and 48. So weekly chart, you're still way in overbought condition. Not the time to bet the farm on it, but the time to keep an eye out for possible exhaustion. Here's what it looks like on the daily chart again, right? If we break the highs, guys, specifically 46.90, which is the actual stretch high, you're basically looking for that upper parallel. Okay, and at this point, just shy of 150, maybe 149.30s, 149.20s. So big level on this stretch higher. Momentum turning. Look for that break below 70 on a daily close basis. Also, the one thing I want to note is intraday levels. As far as that's concerned, watch the close. This is the daily chart, the resistance level that matters on the daily chart. You look at this on a daily close basis, pretty rock solid. So that's what's really going to fuel the next leg higher if dollar CAD has it in it. Here's what the intraday chart looks like. Again, I was messing around with the intraday levels this morning, just looking for some slope on this decline. I don't know if this is in play, but this is a good shift formation. And whoops. And could be in play. We don't have enough evidence to suggest that just yet, but so far so good. So levels unchanged, just add that fork on there. You got a nice touch of resistance and nice touch of support. It's the only reason, sorry, getting a little tongue twisted this morning, that I'm still kind of paying attention to it. You do have some touches on the slope. Hey, Ted, great seeing the room. Says, how do you get the little red circles on your chart? Sorry for the new person question. No worries, man. Great to see you here. It's just a drawing tool on TradingView. So you might have an arrow. You might have any one of these symbols represented here. Click on the circle next to it, or the arrow rather next to it. It'll give you the drop-down menu, and then just select circle, the circle tool. Hope that helps, Ted. And I really just do that to highlight the thing that a lot of people will tend to understate is time, right? So you have people who love using fibs, you got people who love using trend lines. Well, it's the confluence region that gives you the time factor. So not only what levels are we looking for, but what time frame we're looking for. So right now, Ted, like heading into the US Open and basically into the Open of Asia tonight, Open of Europe tomorrow, this is the level of key support you want to pay attention to. And the slope gives us sort of that that added info on what we should be looking at with respect to time. So that's dollar CAD. You know, again, as a disclaimer, I don't have any open exposure on this right now. I'd want to be short against 145.35. You had an opportunity yesterday to get it. Unfortunately, it didn't have the guts to take it. We need to see this start to give us a little bit more of a momentum kick. You can see intraday momentum since the start of the week hasn't even broken 40 essentially. So use caution on this. All right. So that was dollar CAD from last night. No change to the levels, just that slope. We'll see if that holds. The other one that we highlighted last night was an update on Aussie. And again, for anyone who's new to the room, remember that if you don't see the weekly and daily chart accompanied with it, you can always click on the previous one, and it's always one click away. So I alternate the daily and weekly charts with each update. So if you don't see it on the immediate one, just a quick reminder. But last night, or let me show you the weekly charts. First of all, why do we even start to look for a support bounce in Aussie? Long-term slope. Here's what the weekly looks like. Pretty big, okay? Sorry about that. Here's what it looks like. So the 2001 highs, pivot in price, just a basic pivot, converged on slope. So this parallel off of these highs from 2013, 2014, this slope has been, you know, pretty decent. We've continued to work with it. There's a parallel off the lows from that February 2015 drop, pivot, breach, acceleration, support, converges right down there on the 2001 high. So just beyond that, I do want to mention 55, essentially 54.99, 54.90. This was a huge region as well, an 88.6 retracement of the entire 2001 advance, and a 1618 for the recent decline off the highs. So boom, boom, boom. So on a longer term scope, you stretched into a major critical longer term lateral level. You also had a basic support touch here, 1, 2, 3. And on a close basis, you've respected even this confluence. So obviously last week we closed well above that. So you're looking for exhaustion. It's kind of a giveaway tell to start to look for the rebound in price. If we mount a close above 30, it would be, you know, a little bit more of a conviction type of rebound play. Here's what it looks like on the daily chart. All right, there's that confluence zone. Here's the rebound. 2008 low day close was 60.11, a target that we were looking at last night. That broke through the next upside level, 60.90, 60.89, and that's a basic 38.2 of the recent drop, essentially covering all of the 2020 range. So we stretched just shy of that. Here's the pullback. Watch today's close. Bearish invalidation, right? The thing that would suggest that a much more significant low is in place is if we get back above 61.81, get back above former slope support. Remember, this pitchfork held price for over a year in Aussie, right? Real clean, real clean. Topside resistance at the upper parallel, break of the lower parallel, drop, descent into hell, if you will, right? Really vicious drop. This is the level also that'll invalidate that downside bias. All right, intraday looks like this. So again, if you were looking at this with us, or if you're looking at this with me last night into the update, there was the breakout above 59.58. Like I said, we took out 60, what was that level on the daily chart that we were just looking at? 60 and change. Here's that 60.97, 61.17, 100 off the low. So even if this is corrective, and a 50 off the high of the near-term decline just from the March range. Really nice pivot. I still think you can get the stretch. All right, so I'm not bailing on this completely. If we get back below slope support, probably want to kind of reassess it. If we get back below former resistance, finito. You're going right back towards 57.24, 56, 60s, and down into the 56, 55 handle. So for me, it's all about this. 61.81 is the level that I told you is the bearish inval, because again, that would put you above slope, former slope support. 618 is just higher at 62.35. So all of these are levels to pay attention to. If you get the break higher into the US trade session, you want to see support above this slope, back below descending channel resistance, and you're looking for a resumption. If you're holding longs, do something into 61, okay? If you're looking for new positioning, if this thing pulls back into the US trade session, look for support along that slope. Questions on Aussie dollar? In fact, at this point, just to clear things up, I put bullish inval right at the weekly open. Here's your weekly open, and that converges on slope basically into the open of Asia. All right. Also, a quick reminder to anyone who's new to the room as well, there's a camera button on the top of your GoToWebinar screen, your window rather. If you want to take a snapshot of any of these charts, they're all the same charts that we put in the reports, but just in case you need the updated one, feel free to do that. All right. Where's Pete? You still with me, Pete? Sorry for making you wait, man. Here's SPX. Super interesting. It's $1, $2, CAD was number 3, Aussie 4, SPX number 5. Okay, so here's SPOO's top-down approach. Here's SPX on the weekly. So obviously, guys, we put this into log scale, and we're looking at such a larger time frame for the SPX rally. Big regions, and I don't want to say we called the low, but we were pretty darn close. We were talking about 21.93 and 22.39, both levels of interest. That's the objective 2017 yearly open. Not Michael Boutros' opinion, not Jamie Setley's opinion. Fact. You also had the swing highs from August of 2016, which were a clear pivot into the close of the year. We broke above that, and for the next 2 weeks held a support before continuing higher. That range converged on basic pitchfork support. And this is a high-low high from the 2018 lows into the high we made this year. It's the first test. Okay, it held. Big test of that region. The big major resistance zone that we were talking about from a weekly standpoint also got tested already, and that's 24.86, 2018 low week close. So for SPX, man, this is do or die, Peter. If we get back above 24.86 on a weekly close basis, you're basically back in the confines of that long-standing uptrend. If you fail here, well, that's a simple break of support, check of support as resistance, and move right on. So for me, it's pretty significant how we close the week here. We could shuffle here for the next 3 weeks sideways. I don't think we're in that environment. I think the volatility is here to stay for a while. So if you get the break, the next weekly resistance level comes in right at the 2018 yearly open, and that's all the way up here. Now, I know we're talking about massive 10, 15%, 20% ranges here, guys, but that's just where we are, the fact of where we are right now. Immediate weekly support, I would just eye the weekly low close. That's 22.97. Watch that zone if this thing is going to collapse again. So just some reference from 1,000 feet up on SPX. What does the daily chart look like? Well, here's what that is at this point. Not the most convincing, not the most sexiest chart, let's say, but here's the breakdown. Near-term slope that we were following just off of the 2018 lows. Grinded into the high, failed, really messy on the break of support. So I just have this on here for reference, guys, to show you the break of upslope. But here's a decline, 2019 highs, 2018, and we just railed right through, right? Here's the rebound, initial resistance right here. Now we've had building divergence into the lows. I always tell you guys to pay attention to this, but be mindful when they're in weak areas. So a lower low, lower low, lower low. series of higher lows or even equal lows would still be considered divergence, right? You're looking that the oscillator is not confirming a new low in price. So the shift in daily momentum is there. You're coming up against downtrend support, some lateral levels of significance. Do we get to pop higher? Well, the first thing you look for is a break of some near-term downtrend resistance. And here's what it looks like. Okay, so forget this slope. I just added this morning. Forget this slope for now. Here's what SPX looked like last night. Well, actually, I guess I did add this on last night. But basic breach of channel resistance, right? Parallel off the high, saw 1 touch, 2 touch, 3 touch, confirms the slope. A parallel off that off the lows, pretty much caught the lows. Here's the breach. Well, the first level of significance that you need to get through is right here at 24.97, 25.21. Well, that's exactly where we registered a high last night. So something's got to give. Something's got to give. Again, if this breaches rather, and this is a legit breakout of the descending channel, that's still your big Bahama Mama. That's still sort of your goal, right? As far as the major level of resistance that you'd want to see. 26.46, the objective 2018 yearly open, 26.71. Stop traffic converges on the upper parallel again into the close of trade today. So the levels are clear, Pete. I do like this. I do like this. All things held constant from a trading standpoint, really near-term stuff. You want to stay constructive above 23.34. Topside breach from here above 25.21, and you're looking for that stretch towards 26.46, 26.71. Reassess if and when we get here. Okay, constructive cautiously well above this zone. If we get back below the lower parallel, guys, if we get back below those lows, you know, you're essentially looking for the risk for a much steeper drop. But like I said, it's not going to be a V shape. This might grind sideways. It might take some time to base, but we're at the hallmark of at least where we should start to look for that, both in price and in time, right? Obviously, a lot of this is going to be headline driven. So again, keep your eyes on the headlines. We'll try to keep you updated on SB Squawk. It's, you know, things could fall apart. You know, if they come out and the whole bill falls in the House now, or there's some sort of dissension, there's no time to mess around with this kind of stuff because this is truly an unprecedented market shock. I don't want to get into the Corona part again, but you guys get the picture. SPX levels. Questions, comments, concerns? All right, so next up on tap, dollar Swiss. Oh, well, what am I talking about? Swiss, where is it? Here we go. So this one, again, I haven't operated on yet, but we've continued to track it. And my basic, you know, everything changed for us when we got back above 94.40s, essentially, and this thing just started reversing off of downtrend support. This was a level I really wanted to see hold. The 2019 open is a 618 retracement, the entire drop. Now, if you take this retracement to the highs, just want to show you this. It does have the 618 at that level. So while I was kind of stringent at 98.36 at first, and once this broke through last week, I got all ticked off, and then this week it was settling there again, and I don't know. Dropped this 618 from the high to the actual stretch highs, which was a multi-year high, right? Puts you basically at Fibonacci resistance, at slope resistance. So maybe still an exhaustion trade here if we're going to hold this slope. I don't know. So I'm still cautiously looking to play the downside, but man, this thing turns pretty viciously. Peter saying, thanks, Mike, helps a lot. Hey, you're more than welcome, Peter. Man, things look good, right? I'm with you. Usually I'm not a big SPX guys. For those of you who've been with us over the last 6 years, you know, I'm not really a guy who actively scalps SPX per se, but in these last couple of weeks, last months, I'd say, market levels have been pretty clean. So enjoy, my friend. Here's the daily chart. The reversal close post the November high. was 99.12. Again, we just turned ahead of that. The high registered at 99.02. So again, there's nothing here that's sort of jumping at me like take action now, but I want to see if there's going to be any follow through off this. I feel more comfortable below 98.38, even though the 618, I just showed you the stretch there. But I feel more comfortable if we hold below that for this thing. But look, at the intraday chart, at the end of the day, there's just no Momo. This thing is completely flattened on momentum, but the levels aren't that shabby on the near term, right? So 2020 objective yearly open, love those levels. It's again, well-defined level by fact, not any emotion tied to it. That's going to give you 96.71 as the objective yearly open. The objective weekly open, now offering some resistance, 98.45. Looking for kind of a clearing of that range. At the end of the day, if the weekly opening range gives out, we're just below that slope. I'm looking for the breakout towards parity. A 1618 off the low basically gives you parity 17. Just above that, you got a pivot zone that we've been watching, parity 27, but you get the picture. We would need a assertive break below 96.71 to suggest that there's a bigger turn in price here. So nothing to do here just yet. The ideal scenario would be either this spikes higher and fails at that parallel, you get a stop against this high. Break lower here would give you the dump. 94.50 would be the kind of the big zone of interest on a support. Or if this thing just dumps ahead of that, now again, that's the ideal scenario. If this thing just dumps ahead of that into this zone and it holds, you're kind of just looking for the resumptive move higher. Not my favorite scenario, but that's basically the risk if 96.70 holds. Any questions on Swissy? It's interesting. We've been talking about Swissy like every week for the last 3 months, which is, again, a sign of the times, right? When Swissy price action turns back on. All right, dollar yen. Another one where it's make or break, man. It's right here. Something's got to give in dollar yen at these levels. Here's what it looks like on the weekly chart. So where we turned, not so surprising. We were looking at 100 spot 71, 101 spot 26. Big zones of interest, major pivot on that 26 is the low from 99. Multi-year, right? Multi-decade pivot. 50% retracement of the entire 2011 rally. Down slope support. This is just a parallel. Let me take the log off there. This is just a parallel of slope resistance, right? Downside move, boom. We're right back into resistance, guys. Plain and simple. What's completely breathtaking to me is that in a 4 to 5 week span, we covered essentially all of last year's range twice on the way down and the way up. Man, that's just insane. So look, 2019 high, we closed 111.54 on, we did technically close a weekly candle above it. It was just by a hair. Here's what the closes look like, right? Without plummeting it, before plummeting again, here we are yet again. So I'm looking for a reaction up here. If we pivot back above 11.54 and we make a breakout close, yeah, you're looking for 113, 114, right? 113.70, 114. The immediate threat, though, for me is for the possibility for exhaustion. All right, look at momentum right below 60 still. Price right back above resistance, right into resistance, right? Here's what it looks like on the daily chart. Now this pitchfork we added on the decline, on the breakdown here, and it caught the lows pretty much. Look what just happened. Again, you can't make this stuff up, guys. So the high day or the reversal day close from back here last month gives you 11.68, 11.58, 11.59, excuse me, 11.60. We're there now. That's resistance. So look, am I brave enough to try to press the short on this? Not yet. Near-term price action hasn't given you any type of tell. daily momentum flattening below 60 after an oversold reading. So if we go back to our sort of textbook RSI plays, guys, when you get a break into overbought, that's usually very constructive for the uptrend. In those scenarios, you want to find support at or above 40, just like you did here, just like you did here on every pullback, just like you did here, just like you did here. It didn't. It broke that into oversold. That turns the momentum profile bearish. If it is bearish, on a rally higher, you should find resistance at 60, and you're seeing momentum struggle here at 60 as price is testing resistance. An added piece of evidence, rationale or reasoning to take a trade, not quite, but evidence. What does near-term price say? What does near-term price say? So here's what the intraday chart looks like. We've been looking at this channel, and all these levels are unchanged from the update back on the 23rd. Same levels, right? Same levels. You're looking at 111.60 as initial resistance. We didn't hit it last week, but boy, we've tested it 3 times already this week. And you're seeing a little bit of a consolidation range just below. If we break higher, again, the 2018 open comes in at 112.65. That's basically your next major level of upside resistance. 112.17, soft target, 2019 high day close. But both of these would be targets on the upside if we breach. You'd be looking for exhaustion into the weekly close. Let's just say that. Now, if risk truly turns quote unquote back on, air quotes, you might see the yen take it more in the chin, okay? And that may be the potential for the upside fuel to breach here. This is the abomination. I put an asterisk around this setup, as in it's going to do what's going to screw as many people, okay? It's just what dollar yen does. So be cautious. Ideal scenario, if you might put a pistol to your head, what's your best case scenario? Best case scenario, this thing whips, completely throws me off today, and I'll be looking for exhaustion if it closes back below. So even if this thing rips, tests channel resistance, but settles back below this zone, I still think that's exhaustion. If it holds above on a closed basis, 112, 112.17s, you know, there's not really a trade. You could try to get into a long position, but you're chasing. You're chasing. You're essentially risking 114.50 and 115. A break and close below 109.68 is, in my mind, what would validate a little bit of a turn here in dollar yen to try to play the short. But low conviction for me at this point. All else, it's Wednesday, and it's a really clean weekly opening range. You set a range low, high on Monday, and it's already been tested. So hopefully we get some clarity on this. Dollar yen. Any questions? Last but not least, how is gold not on here? This is nuts. Okay, so almost last but not least, here's sterling. British pound at resistance. Here's what the update looked like right into the start of the week on the 23rd. We noted this slope. We noted that we were sitting on the 100% extension, 114.46. We noted that slope resistance, or support rather, was just lower. We were looking for exhaustion into this zone. We got it, right? That ended up being the low. First level of resistance, post-Brexit low, 119.50. High sterling, right at resistance. Right at slope resistance. And again, Ted, for anyone who's new to the room, you know, not only the level nailed on a lateral level, but also in time, right? All right, maybe a couple hours ahead, give me a break. So here's what it looks like. You know, I still think we should be looking for sterling basing. However, I worry that this thing is gonna wanna make one more washout. Sterling is known, guys, I always tell you, it's a professionally traded market. This thing is notorious for the throw over, the break of support, then recovery, the throw over resistance, or drop, the false, the lowered ceiling, we call it, where it makes a run towards resistance and turns just ahead. It's just known for this stuff. So I would have liked for this to be more of a washout type low, like here, like here, like here. Right? If you look back historically in price action for sterling, rounded bottoms do happen, but the more significant ones are usually the ones where you get a washout, a spike, a long-tailed wick. So I'm cautious. But I wouldn't put it past this thing to make a new low. I don't understand the time part. How do I learn that? So Ted, you're in the right place, brother. We got a lot of resources right on SB for you. So if you scroll to the top, you get a lot of go through Pitchfork series here. We go through using all of the tools that we use here. But all I'm trying to tell you is that you're looking for price that matters on the lateral levels, and then the slope or the pitchfork where those converge on the lateral levels give you a significance of that time aspect we're talking about. So yeah, this level of lateral support was important, but it was even more important right here when it was converging on that line. And when that broke, you saw the accelerated drop. In the example I just showed you right now, this was a lateral level of significance that we were looking for objectively, right? It's the post-Brexit low, but because it converged on this trend line, it told us we should be looking at it pretty much in this time zone, right? So over, I don't know, coming into March 25th into this zone. So not only did we open the week down here, it held, but that's where and when we peaked. He says, oh, I see it now. Right on, brother. All right, cool. The learning curve is kind of steep, Ted. I don't want you to get discouraged. Just ask questions, man. We do this usually twice a week. This week is abridged just because of time restraint from my end. But and Jamie also gets on for the midweek strategy webinar. So feel free to drop your questions at any time, man. Any questions on Sterling from here? Okay, that's my concern. That's my fear, is that if it does wash out, you get a spike into 111 to just rip people's faces off of, and then recovery. At the end of the day, if we cap 120.84 on a daily close basis, I'd be much more comfortable. Working with this as being a more significant near-term low. You look for slope at that standpoint. You look for something to give you a guidance, but we're not quite there yet. I was looking at this morning. We're not quite there yet. And even if you take the low, it's just too sharp. So things to take into consideration. Ultimately, on a pullback, you'd want to see weekly open support hold. Oops. Ideally, this would hold on a pullback and in the breach. But if we dip back weekly open, I really do think this thing's going to wash out before it turns. And obviously, a little bit of a lag time with how the UK is approaching the coronavirus outbreak with regards to their shutting things down. So it puts me on edge with Sterling, because if they see the kind of numbers, growth, breakout type scenarios that we're seeing here in New York, or if this lag time is still going to catch up with them, you might still see Sterling, take that leg lower. For me, it's all about this zone. Watch for a breakout above this zone. Sort of shift our opinion here. All right, last but not least is gold. See some gold traders in here today that are usually questioning this trade. Here's what it looks like at this point. Hey guys, I think we've made a more significant low. All right. Now, having said that, it's not quite justification and jump into long positioning from these levels. Now we've made over a 10% rally, if I'm not mistaken, 12% off the lows already. But boy, oh boy, 1447, 1452. I know you guys know that we've been looking at that region. What a reaction. I mean, the low that we registered last week was basically there. The low was actually at 1451 spot 08. So right in that zone. Strong reaction. I want to also bring your attention to this slope series that we've been following of the ascending slope within the confines of the pitchfork, the red series here. Guess what? On a closed basis, rock solid. Okay, so essentially, guys, gold rebounded off of uptrend support. You try to take a step back and just take it to basics. Forget the noise, forget risk on, risk off. What does price say? Well, this thing came into uptrend support and rebounded, and boy, was it quite a rebound. Okay, now I say that just as my opinion, but near term, you're at the risk for some exhaustion right here for a pullback. But I don't think you want to necessarily jump on board for crazy shorts at this point. Imen saying amazing setup, Michael, as always. Thank you. You're more than welcome, Imen. They're not my levels; they're the market's levels. I'm just trying to help you guys find them. Here's what it looks like on the daily chart. This is why I have a moment of hesitation here. Break of uptrend support, rebound, test of former support, now resistance. If this holds and we start to crack back below 1550, you're looking for a new low, period. That's just the way I'm looking at this. And this is just my humble opinion, guys, objectively. This is what I see going on. If we mount 1650, well, then I'm looking for a resumption. I'm looking for 1713 and above. For me, it's all about sort of what we do right here, right now. Immediately heading into the US trade session, yes, you're checking former slope support. You could see some pullback, looking for support on that pullback. Now, we already got it today, and you have the objective monthly open. So not Michael Boutros' opinion, again, no one's opinion, fact at 1584. Also a longer dated 618 of the record drop, or the drop rather from the record high, converges on the objective March open, 1585, key level support. Here's what it looks like on the intraday. Now, I'm going to remove this real quick just to kind of show you again how I approach these things. So remember last week we were working with this slope. And again, don't take my word for it, guys. You can always go through the archives and check it out. Here's our last gold update. All right. And here's the one before that even, right? All the same slope. And even though we broke that slope, once we recovered back in, what happened? We failed at the 25% line. It held again. And then we held right ahead of the median line. This is when you want to hold on to these slopes. So typically, you see a trend line break, all right, drop it, right? But nope, this one kept on playing. And not only that, when we broke the median line, you saw acceleration. Again, what you want to see in price. Now you're breaking above to the upside now. Now again, is this a false break scenario like down here? Well, you look for some symmetry. And if we bring up our slope and we kind of add a 1.25%, $1.25%, looks like that caught the lows here. For all intents and purposes, looks like it's catching the highs here. Okay, my point being, if we get a pullback from here, it's not the end of the world. It's not discounting the breakout. We could come right back into slope support and hold back from here, but basically above 1550, I'm looking for this thing to give me something. I'm looking for it to show signs of basing. I'm looking for more divergence on the longer term charts. Need to break 1650 on the upside. That would make me much more comfortable. But while the immediate risk is lower, ultimately, I think you want to fade that. Now, having said that, what could interrupt that kind of mentality from the fundy side of things? If markets kind of go nuts, right, in a good way. Oh, we're getting stimulus. There's a pipeline coming for COVID-19 therapeutics, and a vaccine's on the way. Sure, that rush into demand may fuel outflows of gold. My humble opinion is that's not going to necessarily happen. I think everyone's going to look reassessing their portfolios now, and even longer term investors, aside from traders, are going to want to take a step into something. There's a lot of cash on the sidelines now, guys. A lot of people hoarded into cash, and you can see that. Don't take my word for it, by dollar price action in and of itself. So there's going to be people wanting to take a step away necessarily from the massive volatility that you're seeing in broader risk assets and specifically equities, and kind of jump into the relative safety of gold. Is anyone having sound problems? Iman is saying, "Where are you, Mike? I don't have sound." Can I just get a sound check for anyone in the room? All good on my end. Okay, thanks, Mike. Just sent her a message. Thanks, guys. Appreciate that. Iman, Ted, thanks, guys. So for gold, again, I think you wash out a little bit lower from here. Ultimately, you buy that topside bridge looking for 1615, 1678 is the high day close. I just think the long side, you really want to be cautious here. Really want to be cautious here. Yeah, Aurelian says only a minute at the end and the sound starts to No worries, guys. I think it's a go-to webinar thing. They've been overwhelmed, I can imagine, by all the work from home that's happening around not only the US but the globe. So I'll give them a buy this week, but yeah, we've been having some issues. Any questions or trade setups you guys want to talk about in general? It's funny, man. Any questions you want to address? Look, I just want to say one thing, guys. It's still a tough market. I think Jamie sent out a note to our subscribers, to our free newsletter subscribers, just noting that it is a terrifying time from the humanitarian standpoint. And if you're a newer trader, it might be a terrifying time for price action too when you're opening the charts and seeing these massive swings. It breeds opportunity though. We just need to fall into the mindset where we don't have the opportunities sort of overshadow and we start to dismiss our discipline, our risk management, which is paramount above anything, right? So I want to encourage you guys to feel hopeful and see the opportunities that are arising here, but I also want to note caution. Reduce your positioning size. Wait for that cherry-picked entry. If you miss it, you miss it. Okay, don't go chasing a trade. Everything needs to be taken on its own merits, and risk parameters are paramount in everything we do. So just take that into consideration. If you're out there and you kind of struggled, you haven't taken a position in a couple days, it's okay. The market will provide. There's tons of volatility that's still coming up and tons of opportunity still to be taken. Just wait. Pick and choose your entries, okay? And again, I want to just give you guys a quick reminder to look at your position sizes on each trade and take them on the merits of the evidence provided. So the more evidence you have, that's where you up your leverage. Otherwise, it's a good time generally to reduce your leverage size and open up your stops a little bit to maintain your risk tolerance, but at the same time, give yourself a little bit of a cushion. Sorry about the one webinar this week, guys. We had to just tone it down. We'll be back up hopefully on next week with our 2 webinars on Tuesday and Thursday. Till then, best of luck trading. Stay nimble. Don't forget, Jamie will be up into the end of the week here with the midweek strategy webinar. Until then, guys, we're heading to this is the last full week of March trade into the weekend with non-farm payrolls on tap next week. I can't emphasize how important that's going to be. Look, weekly jobless figures coming up tomorrow will be important because we're only starting now to get a glimpse of what the real impact on the labor markets will be from the pandemic. So, man, next Friday's non-farm payroll is going to be so paramount. Keep the powder dry till then. Best of luck trading. Thank you, Iman, Michael, Aurelian. Thanks for the comments, guys. Have a great week. I will see you on Monday for the free session on Daily Effects, and then Tuesday, Thursday right here on SB. Cheers.